Hello guys, my name is Elzingi and I welcome you to my YouTube channel. As usual, today is Saturday and I'll be taking you through some of the lessons I've learned over the past few years. So today we'll be talking about an edge. An edge. What's an edge? What should be entailed in an edge? At what point can you say, oh, I've discovered my edge and many things I can teach. So let's go straight into the video. So fast forward, what's an edge? An edge is a probability of one thing happening over the other, the higher probability of one thing happening over the other. So let's say a coin. When you take a coin, then you flip for 10 times. If you should get the head appearing, let's say 6 times, then the tail appearing what? 4 times. You now have an edge, and the edge is what? Head appearing what? 6 times. So with this scenario, you can relate it to trading. Let's say you place trades, then per your technical analysis or the strategy you use. When you place 10 trades, you win what? 6 out of 10, sorry. So with this one, you can say what? You have an edge. That means after placing 10 trades, even though you will lose some, you still what? Make money. Okay, so according to McDouglas, the trading the zone, an edge should have what? 3 things. One, you should have an entry point. So you have an entry level. So your edge should have an entry level. 2, it should have what? A stop loss. Then 3, it should have what? A take profit. So an edge should give you when to enter, where to place your stop loss, and when to take your profit. If you have learned a technical analysis, then you are not provided with these 3 things. That means what? You have not learned an edge. You don't have an edge to trade in the market. Let's use the support and resistance scenario to explain it much more. So with support and resistance, you are told that when price gets to a resistance level, you sell downwards. And when price gets to a support level, you buy. If the price should break below the support, you have to wait for the retest and sell. If price should break above the resistance, you have to wait for the retest and buy upwards. Okay, so with this, actually, they don't ask you to sell directly as soon as price gets to the resistance level. You have to wait for confirmation before you enter. So let's say you learn a technical analysis and then your mentor tells you, okay, when price gets to a resistance level, what you should do is what? Wait for a bearish candle formation. Then when there's this bearish candle formation, now what? Place your trade. So that becomes what? Your entry. So price gets to the resistance, you have this nice bearish candle formation. Then what? Now you place your trade and you enter. The next question is, where do I place my stop loss? So now maybe you are asked to place your stop loss above the previous what? Resistance level. So let's say at this side, I'll give you what? You place your stop loss here. And then you are asked to what? Place your take profits to the nearest support level. So you place your what? Take profit here. Maybe your first take profit should be here. The second take profit should give you something like a ratio of 1:3. So depending on this, now you have what? Where to place your entry. Entry at where what? When there is what? A bearish candle formation at a resistance level. Stop loss at above the previous resistance level, and take profit. First take profit at the nearest support level, and then what? The subsequent take profits should just provide your 1:3 risk reward ratio. So basically, if you have this in your technical analysis, you have what? An edge. What is expected of you is what? Just to do it consistently. So having an edge doesn't mean every trade will go your way. Some trade you lose, but just that when you do it for a long period of time, you see that the number of trade you lose and the number of trade you win will counter, which is you have less losses and then more wins. So let's say in a month you place 100 trades. With this 100 trades, depending on the risk to reward ratio, that means let's say if you are using a less risk to reward ratio per trade, let's say 1:3. If you should win even let's say 60 trades and lose 40 trades, you'll still be profitable. And so that's what an edge does. So if you have learned any technical analysis and you have all these, you can clearly say you have what? An edge to trade in the market. And what's expected of you, as I said earlier on, is what? Discipline and consistency to repeat the same thing over and over again. Maybe you might lose 10 trades in a row. That doesn't mean the edge doesn't work. That means what you're in the drawdown period. You have to wait, trade again. Let's say get 100 trade sample size. Now you can confirm that the trade is profitable or not. Okay, so that's what I have for you this Saturday. I hope it helped and you can stay with this one. As I this is what I have for you this Saturday. Try and master your edge. Place a long trade before you can confirm that your edge is not working again. Shouldn't just place, let's say, 2 trades, you lose, and then you now change your technical analysis. No. Same approach, same entry, same exit, same stop loss for let's say 100 times before you can confirm that, oh, at this point my edge is not working, or at this point my edge is working. See you on Sunday for the weekly outlook, Monday for the beginning of the week analysis, and Wednesday for midweek, Friday for end of the week, and Saturday as usual for what the lesson I've learned over the years. See you same time next week. Bye bye.